That's the first tick on the index. It's lackluster, you'd have to say. The Nifty is down about 40 points.
We're flat right now, but we're off about 65 points from the day's low. We are off around 70 points from the lows.
Treading water, directionless, and not really running away in either direction. I think that's perhaps the best way to put things. 18,033 around is where the Nifty looks like it is going to close. Real estate, IT and auto are three pockets which did very well.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show we track about 6 hours of trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the top headlines for the day. Stock markets rise with the Nifty reclaiming the 18,000 mark, hitting the highest levels we've seen in almost a month. The Sensex gains 250 points. The mid-caps outperform, while banks underperform mildly. Core and industrial stocks post strong performance for the third quarter. A beat on profitability and order inflows pushes Siemens up close to 3%, while Torrent Power jumps 10% as prospects improve across segments. In pharma earnings, positive management commentary helps Apollo hospitals gain 5% despite weak numbers. Biocon posts a loss on acquisition costs, but biosimilars see strong growth. Oil prices continue to fall on hints of mounting crude supplies in the United States. In the metal space, steel stocks like Tata as well as JSW Steel shine as steel prices rise on a pickup in exports, while Hindustan Zinc and Vedanta stumble as prices of non-ferrous metals dip on a strong dollar index. US inflation comes in hotter than expected, rises 6.4%. Asian markets fall on fears of further rate hikes. Well, here's the lineup that we have for you on the show. We'll get you expert market opinion coming from Nilesh Shah, MD of Kotak Mahindra AMC, and the big corporate voices on the show today are Sunita Reddy, MD of Apollo Hospitals, and Kiran Majumdar-Shaw, Executive Chairperson of Biocon. Well, first up, let's get straight to the day's trading action then. It was another good day for the bulls. The market saw broad-based gains with the Nifty closing near the highest we've seen in the past 1 month or so. The Nifty was up more than 80 points and reclaimed the 18,000 mark on the closing basis. The Sensex as well participated with a gain of around 250 points. Reliance Industries continues to be the biggest contributor to the Nifty today. A good bounce is what we saw on that big boy. The mid-caps, well, they outperformed, while banks mildly underperformed. Prashant Nair is standing by to run us through all of the market action. Prashant?
Well, a strong close and a strong follow-through to the break that we saw yesterday, the break high that we saw yesterday on the Nifty. We took out some important levels as well, which I'll get to in just a bit. Banks underperformed, but they also started to come back towards the last 45 minutes or so of trade. Where were their gains? I mean, the bulk of the gains, if you want to look top-down, were in IT services, autos and real estate, which actually performed quite well. Bank Nifty on your screen, as I said, picked up towards the close, but not all the way. Nifty gains coming through in names like Tech Mahindra, Apollo Hospitals, of course. I mean, we had the management with us and the stock spiked after that, was one of the top gainers on the Nifty. Aisha did well. Reliance, I mean, RIL is starting to move for the last 2 days, and that contributed almost 50% to the gains that you saw on the Nifty. It's an index heavyweight. Bajaj Finserv, SBI Life, HDFC Life were some of the others which did well. There were cuts as well in the broader market. Market breadth has been negative for the last many days, and today was no different. Bharat Forge, CG Power, MCX, RHIM, Campus Footwear, Adani Green, Adani Power, E-Clerks, Uflex, TCNS brands, and there were many others as well. This is the high volume losers list that I'm talking about. Gains coming through in, Borosil Renewables, another one of those companies which was with us on the program earlier on results. The stock ending up sharply. You had Aisha, Torrent Power, Tejas Networks, GIC, RE and New India Assurance, the general insurance, government general insurance players perked up a little bit as well. 2 days running now, the market has done well. We've broken above a rising channel, a small rising channel, which met the Nifty at about 17,960, and we end the day above, those levels very comfortably in a solid way. It's, of course, over to global markets, which are still undecided. We get retail sales, monthly retail sales, which I think are the next big data point out of the US after CPI, which left markets neither here nor there. And, of course, we'll see if there is more wind in the sails for the market to add a couple of 100 points from here. Back to you.
Well, a good trading session, Prashant. Thanks so much for joining and giving us a quick wrap. Well, in market opinion, Nilesh Shah of Kotak Mahindra AMC says that earnings have been below expectations this quarter. Let's hear out what he had to tell us.
The broad results are in line with market, but that's only because of superlative performance from banking and financial services. Moment we remove the BFSI, there are few exceptions here and there, but by and large, companies have given results which are little below expectation.
Well, moving to the second headline now, Siemens gained close to around 3% today as its profitability and order flow for the third quarter beat expectations. Positive commentary also supported the stock coming in from brokerages. Vivek is with us to run us through all of those details. Vivek?
Well, in line with its capital goods peers, Siemens to deliver a robust quarter. Company delivered a set of results that were above analyst estimates in all aspects. When you're talking about the revenues, revenues were high by almost 17% on a year-on-year basis, coming in over the 4,000 crore mark versus our poll of close to 3,960. Margins too were very strong, margins coming in at 14.9% versus our poll of just around 11.2%. On the back of that, profitability jumped higher by almost 87% on a year-on-year basis. Most of the analysts were quite enthused with the results. In fact, Macquarie retained its outperform stance on the company. They say that the robust order inflow, driven mostly by the base quarter and the base orders, were the key standout this particular result season. They're saying that the record level margins look sustainable in the near term, and what they're saying is that even adjusting for favorable effects, this is a very strong quarter. Large locomotive orders, in fact one order that the company has already won, they believe is the key near-term catalyst as far as Siemens is concerned.
Okay, thanks a lot for that, Vivek. Well, Vivek, but we can't let you go at that. It is an equally strong showing coming in for Torrent Power as well. Operational improvement aided by lower fuel cost. That's what helped the stock jump up close to 10% today. Vivek, give us the highlights of the numbers and also tell us what are brokerages making of these numbers.
Torrent Power delivered a robust quarter. This was a strong beat across most of the operational parameters that analysts were estimating. Bottom line was aided by a one-time gain, but despite that, this particular quarter was very strong as far as Torrent Power is concerned. Looking at the numbers, revenues were higher by almost 71%, EBITDA jumped higher by 55%, and when you're talking about the profitability, up almost 86%, coming in close to the 684 crore mark. Like we mentioned, the gas trading gain of close to 400 crore aided the bottom line this particular quarter, and EBITDA was aided by growth across all of the verticals that the company is present in, including gas-based power, renewables, the distribution license, as well as the distribution franchisee business. All of them saw operational improvement. In fact, HDFC Securities maintained its ad stance on the company. They have a target of close to 545. They say that the sturdy gain from LNG trading has boosted the profitability this particular quarter. They're saying that reduction in franchisee T&D losses and also increased contribution from existing distribution circles as well as newly acquired circles in the Dadra and Nagar Haveli have actually aided the results this time around. On the back of that, the stock was a key outperformer in today's trading session.
Got that. Thanks a lot for that, Vivek. Well, NSE India has signed a data licensing agreement with CME Group for WTI crude oil and natural gas contracts. MCX, well, it was a little bit nervous and ended lower on the back of this news space. Manisha joins us to fill us in with more details. Manisha?
Well, thank you for that. Well, yes, NSE has signed data licensing agreement with CME, and this is for crude and natural gas. And remember, CME is one of the largest commodity derivative exchanges in the world. And when you look at crude and natural gas, these are the highest traded commodities in the global markets as well. And NSE also has applied to SEBI to seek approval to launch the contract. It would be traded in the Indian rupee. The base benchmark contract is from CME, but it would be traded in India in Indian rupees there. Now, the important thing here is that NSE, it launched into commodities, started doing commodities in October 2018, and since then we have seen NSE try to do some stuff in commodities, but even with all those efforts, it hasn't really been able to expand or make any strong market share within the commodity market here. In the meanwhile, MCX almost holds the 100% market share when it comes to natural gas and crude oil in India. So there's a very little dent that you could be looking at in MCX, and most traders, when they start trading in one commodity exchange, do not really go to another one. that is another reason or thing that NSE clearly has been facing here. Also, when you look at the numbers within the energy space, MCS actually hit record highs yesterday itself when it comes to crude oil options trading here at around 88,000 crores here. Also, when you look at that number, whether it's about crude oil futures or natural gas futures and options, we have seen the numbers continue to increase. It was actually in the last quarter itself that we saw all-time highs coming in for futures and options as well. And those numbers pretty much have continued in the months of January, especially in Feb as well, where very strong numbers coming in on your screens on that one.
Okay, all right. Thanks a lot for that, Manisha. Well, moving to the third headline now. Apollo Hospitals was up close to around 5%. That's despite posting a rather weak set of numbers in the past quarter. The margins as well as profits, they came in lower than expected. But the positive commentary from the management took the stock higher. Ekta is standing by with all of those key details. Ekta?
Thanks for that. Well, yes, overall it was a disappointing set of numbers in terms of the operations for Apollo Hospitals. Revenue was up 17%. Margins came in at 11.9%. Street was anticipating around 12.5%. And the profit came in lower on a year-on-year basis as well as on a Q-on-Q basis. Now, in terms of the digital health and the pharmacy segment, which is basically Apollo Health Co., the Q3 GMV was up 85% Q-on-Q. They are on track to deliver 1,600 crores in terms of GMV. But the EBIT loss expanded all the way to around 74 crores this quarter versus 54 crores in the previous quarter. The diagnostics and the retail health EBIT also was a loss this quarter of around 2.5 crores. Now, despite these performances in these particular verticals on the operating front, what has really enthused the street is the commentary from the management, where Sunita Reddy has indicated that they have reached a peak burn or losses when it comes to the digital business, and critical volumes are important to scale the business. They have a requirement of around 200 crores in the first half of FY24 for the digital business, but after that they are also alongside speaking to non-strategic long-term investors for the digital business. So the fact that maybe the losses have peaked at this point is something which has enthused the street. They are on track for the GMV targets that they have put out. The core healthcare business continues to perform well, so that is definitely a positive. On margins, they said that they expect a huge ramp up in margins in FY24. Let's listen to Sunita Reddy, in fact, talking to us earlier in the day.
We've reached a phase of peak losses, and in the process, in the first 3 years of digital, it's very important that we get volumes, and critical volumes are very important to scale the business. We have currently 25 million users, and we're doing over 45,000 transactions on the online business. And I think all of this comes at a cost. There will be a requirement of 200 crores for the first half of next year. And this is something that the parent company can definitely fund. We do have for the long term, we are talking to investors. They are not strategic in nature, but investors who are there for the long term. And I think that all of us know that the environment at this time is not the appropriate environment for capital raise, but we are working on a capital raise.
All right, moving on then. Biocon posted a strong showing the third quarter with the revenues as well as EBITDA rising close to around 35% on a year-on-year basis. However, the pharma major posted a net loss on account of an exceptional item. That was acquisition cost of around 271 rupees. Here's Kiran Majumdar-Shaw, the executive chairperson of Biocon and Biocon Biologics. She detailed those numbers as well as had to say about that acquisition. Let's hear her out.
Felt that retiring the mezzanine funding was very important. An effective and way of using smart capital is to basically divest a small shareholding in Syngene whilst basically retaining majority control. So I think the Syngene stake sale will be used to retiring net debt. And we believe that we are also in the process of raising equity to look at the overall reduction in acquisition debt at BDL level. Right now we have raised a $1.2 billion debt to make this acquisition. And if you add the $300 million of existing debt in Biocon Biologics, we have an overall debt of 1.5 billion. So right now, Serum has invested $150 million in Biocon Biologics, and of course, they've also given a loan for funding this transaction to Biocon of another 150 million. There is a possibility that they might convert that loan into equity at some stage.
All right, time to slip into a short break, but you stay with us. We'll be back in a jiffy, and we'll highlight the other few headlines that we're tracking for you.